Hi everyone, welcome to the channel. October 9th, 2025, the day that PepsiCo drops its Q3 numbers. Will the snack and soda giant sizzle or fizzle? Today we're diving deep. Expectations, trade setups, and what could come next for Pep stock. Let's get bold. Let's get real. Before we dig into Q3, let's set the stage. In Q2 2025, PepsiCo reported adjusted EPS of $2.12, topping estimates of $2.03. Revenue came in at $22.73 billion, slightly ahead of expectations. But it wasn't all sunshine. The company has been battling inflation, tariff-driven costs, FX headwinds, and soft consumer demand in North America. In April, PepsiCo trimmed its 2025 earnings guidance. What was once a mid-single-digit growth expectation is now flat to slightly down in core constant currency EPS. Management is guiding low single-digit organic revenue growth, but warned of material FX headwinds and cost pressure. So Q3 will not be judged in isolation. It's being seen as a test. Can PepsiCo show resilience in a tough macro regime? All eyes are on these key levers for Q3: earnings per share, EPS, and revenue. The consensus is hovering around 2.26 sounds EPS and $23.86 billion revenue. Some analysts see potential downside. Zacks implies a 1.8% year-over-year EPS decline. Margin trends, input costs, tariffs, commodity inflation, and supply chain disruption remain a drag. The question: how well did PepsiCo absorb or pass through these costs without killing volumes? PepsiCo has warned of negative currency translation effects, and in Q1 they built in 33 percentage points of FX drag. More recently, the FX drag guidance was toned down from 3 PEPs to HAL 1.5. That's a subtle but meaningful shift. Geography and product mix. Will international, away-from-home demand outpace weak North American consumption? Can snacks outperform beverages or vice versa? Management commentary and guidance updates. The Q3 call at 8:15 a.m. EDT will be critical. Any revision to full-year guidance, commentary on cost mitigation, or new strategic initiatives will move the stock. Bottom line, the market is poised for a tightrope act. Surprise upside could fuel a strong bounce. A disappointment, or cautious tone, could trigger selling. Let's map out 3 broad scenarios and their likely stock responses. If EPS beats, revenue holds, margins steady or improving, tone is upbeat, then expect a rapid rally, plus 2% to plus 5% intraday, possible follow-through into the week. If EPS comes roughly around 2.25, revenue flat to plus 1%, guidance unchanged. Then expect a modest reaction, volatile day, maybe plus 1% to minus 1% zone. But if EPS misses, margins pressured, guidance cut, or cautious commentary, we should expect a sharp sell-off, minus 3% to minus 7%, possibly worse on headline risk. In a positive surprise, given the market's sensitivity to macro risk, Pep could catch a strong bid, particularly if management upgrades full-year guidance or signals structural margin improvement. On the flip side, if they disappoint, the stock may tumble, because much of the optimism is already priced in, and the burden is on execution. Also, look for nonce moves in the after-hours while our pre-market session, as the releases before market open. Traders will respond quickly to tone, commentary, and guidance updates. Now the fun part, trade ideas. These are high-risk, high-reward, event-driven plays. Only deploy them if you have tight risk management. A. Pre-earnings straddle, strangle, options. Buy a straddle, call plus put, or strangle around implied volatility, aiming to capture a large move in either direction. Risk, IV crush after earnings, so size matters and be ready to get out fast. B. Directional play, long or short. Long bias, lean long calls or outright stock, if you believe a beat is likely or guidance will be upbeat. Short bias, Lean long puts or short stock if you expect margin pressure, weak commentary, or guidance cuts. C. Post-earnings momentum. Fade. Reversion. Sometimes, a huge move post-earnings is overdone. You might fade extreme spikes, e.g. short into the run, once volatility calms. But be careful. Fading too early is dangerous if momentum is strong. D. Earnings reaction. Pullback play. After the initial move, wait for consolidation, then jump in if direction continues. Example, after a strong upside surprise and 4 to 5% pop, wait for the stock to pull back 1-2%, then enter long. Risk controls. Tips. Keep position size small. These are event trades. Predefine your stop-exit levels. Use limit orders around earnings monster gaps. Monitor liquidity and implied vol. PEP is relatively liquid, but options spreads widen around earnings. Watch macro headlines, rate surprises, macro data. They'll amplify or drown your trade. Once Q3 is behind us, how might PEP behave in the following weeks and months? Momentum continuation, trend breakout. If Pepsi delivers and revises guidance upward, the stock might retest recent multi-month highs. Many analysts have 150, 160 plus targets. Sentiment could shift more bullish, and multiple expansion may follow. Mean reversion, pullback. If the post-earnings move is excessive, expect a pullback or consolidation zone. Watch support zones, e.g., prior low resistance turned support, to see if they hold. Valuation reset, multiple contraction. If guidance is weak or macro deteriorates, multiples could contract. Even if fundamentals are stable, the stock could lag broader markets. The full-year EPS drag of 3%, expected by PepsiCo, looms over valuations. Dividend plus yield story. Pepsi returns $7.6 billion in dividends and $1 billion in share buybacks in 2025. For income investors, the yield, currently 3.8%, is part of the case, even if capital gains are muted. In sum, a strong earnings release could re-accelerate the uptrend. A lackluster one could push the stock into a prolonged consolidation or downtrend. Quick logistics and what to watch on October 9th. Earnings release schedule. Press release plus 10Q expected. 6 o'clock a.m. EDT. Management remarks at 6:30 a.m. Live Q&A at 8:15 a.m. Watch for cues in the prepared remarks. Any forward guidance tweak, margin commentary, or cost assumptions will drive volatility. Listen to Q&A. Sometimes the real surprises come from the analyst questions. Aftermarket, pre-market reaction. The market will digest initial commentary before the full open. And finally, macro context matters. If macro or rate news breaks that day, it could amplify or override PEP's own story. Also monitor key levels on the chart. Where does resistance lie? Where might support come if it drops? Use your technicals in concert with earnings reactions. Let's recap. PepsiCo enters Q3 with some pressure. Cost inflation, tariffs, FX headwinds, and consumer softness are all in play. The expectations line is modest, 2.26 EPS and 23.9B revenue. Trade setups are available, from straddles, strangles to directional bets, but risk is high. Post-earnings reaction could lead to momentum continuation or aggressive reversion depending on surprise strength and tone. The bigger question, can PepsiCo pivot the narrative mid-year and regain investor confidence? If you're trading this, have your plan, your exits, and your risk limits mapped ahead of time. And if you're investing longer term, this Q3 is a litmus test for Pepsi's ability to hold value in a volatile world. If you liked this prescriptive earnings breakdown, hit like, subscribe, and ring the bell. I'll have real-time post-earnings analysis, trade recaps, and chart follow-ups. Drop your questions or trade ideas in the comments. I'll read them on the 9th as the numbers drop. Thanks for watching. Let's buckle up for October 9th. That's when the soda and snack war hits Wall Street. Good trades and beware the volatility.